Welcome to Illuminati Silver. We tell the truth about silver. Today is Tuesday the 20th of July 2020, and on Sunday we published a video entitled How to Assure a Comfortable Retirement. And we hope that those who listened to it found it useful, and those that perhaps haven't, you can find a link to it in the description box below. Now on Saturday we provided our weekly update for the weekend in the 17th of July, where we concluded by stating next week we're expecting some degree of consolidation, and with silver attempting at least to aim for that $20 level and gold for $18.50, though we are more confident in the former being reached than the latter. Well, silver not only attempted to reach $20, but actually quickly flew past it, and has actually hit $21.06 as we produce this, which is the limit the Silver Institute placed on silver for this year. That's $21, as was ours, to be fair, back in February, before this crisis took hold. Gold, meanwhile, has reached $18.40, just below our $18.50 target limit. Now, the dollar index has fallen below 96 and is currently 95.71, which has helped precious metal prices. However, traders claim that the greatest stimulus was the EU Recovery Fund announcement, which has created a fund of some 750 billion euros, thereby ensuring even more financial support being made available. In addition, the coronavirus spread across other countries outside of the US, which itself is suffering quite heavily at the moment, has also created a degree of further uncertainty and flight to precious metals, albeit mainly precious metal-backed ETFs. Traders and analysts are now split. Some claim that silver will fall back to $19.50, and others claim that should silver hit $22 within the next 24 hours, then it will rapidly move to $25. So let's take a look at what both Bloomberg and Reuters have had to say in the last hour or so. Bloomberg article dated July 21st at 3:55 p.m. GMT +1. Headlines: Gold, silver are surging to multi-year highs on virus spreading. Precious metals are soaring to multi-year highs on the back of persistent concerns over the coronavirus and the outlook for further economic stimulus worldwide. Gold futures surged to an almost 9-year peak, and silver touched the highest since 2014 after Hong Kong reported additional cases of the virus and new infections in the Australian state of Victoria surged, fueling demand for haven assets. European Union leaders agreed on an unprecedented stimulus package to pull their economies out of recession. Silver, used in manufactured products ranging from solar panels to electronics, is getting an added boost from supply concerns and bets on a rebound in industrial demand. The two metals are the top performers in the Bloomberg Commodity Index this year, as investors clamour for insurance against further economic fallout from the virus. Low interest rates amid easy monetary policies have also bolstered the appeal of the non-interest-bearing assets. The jump in demand has sent holdings in exchange-traded funds backed by the metals to all-time highs. For gold, it's the same old story. Real rates continue to grind lower, and we are reaching levels close to the global financial crisis, Daniel Garley, TD Securities commodity strategist, said by telephone. We've seen that silver has been increasingly trading as an industrial metal. We think the marginal unit of demand for silver is coming from the industrial metal side. Gold futures for August delivery rose as much as 1.5% to $1,843 an ounce on the COMEX in New York, the highest for a most active contract since September 2011. The price was up 1.1% at 10:51 a.m. Silver for September's delivery jumped 7.1% to $21.63, the highest intraday since July 2014. Other precious metals also advanced on Tuesday, with palladium futures gaining as much as 6.1% on the New York Mercantile Exchange and platinum climbing 6.8%. Even after recent gains, there's a long list of banks and traders predicting silver will keep rising as investors continue to pile in. Citigroup Inc. said in a report this week that it sees prices rising to $25 in the next 6 to 12 months, with the potential for $30 based on the bank's bull case. Silver is now leading the charge, says Stephen Innes, chief market strategist at Axicor Limited. The metal is following the same trajectory as during the global financial crisis, he said. Back then, prices dropped during the worst of the crisis before rallying to fresh records near $50 by 2011. Reuters article dated July 21st at 4:18 p.m, that's GMT +1. Headline: Precious gold jumps over 1% to over 9-year peak as dollar stumbles. Silver hits over 6-year peak at $21.18 an ounce. Palladium rises over 3% to hit a near 3-month high. Dollar drops to 4-month low. Gold will push towards record highs over the next 18 months poll. Gold surged as much as 1.4% to hit a 9-year peak on Tuesday, boosted by a sell-off of the dollar and expectations for increased stimulus to aid the recovery of pandemic-hit economies, while silver dashed past $20 for the first time since September 2016. Spot gold rose 1.1% to $1,834.97 an ounce by 10:50 a.m. EDT, 14:50 GMT, after hitting its highest since September 2011 at $1,841.01 per ounce. US gold futures rose 1.2% to $1,838.60 per ounce. The US dollar has dropped as the world is looking a little bit better. Interest rates have fallen across the yield curve, and that again is another factor helping gold, said Bart Mellick, head of commodity strategies at TD Securities. The US dollar, viewed as safe haven rival to bullion, hit more than a 4-month low. US congressional leaders are set to discuss a fresh stimulus package this week, with the Republicans announcing plans to seek another $1 trillion in economic relief. Adding to the support, European Union leaders clinched a historic deal on a massive stimulus plan on Tuesday morning. Gold will push towards record highs over the next 18 months, a Reuters poll showed, even as low jewellery sales in Asia and the prospect of economic recovery will hinder further gains. As economic uncertainties fade, demand for safe haven assets, including gold, should fall. However, this is only likely to take a little shine off the gold price, as ultra-low real yields remain a key component. Capital economics economist James O'Rourke wrote in a note. In other metals, silver rose 5.3% to $20.95 per ounce, having earlier hit its highest since July 2014 at $21.18. Silver is starting to outperform gold here. On the one hand, it's obviously appreciating on the basis of increased appeal for precious metals, IG market analyst Kylie Roda said. On top of that, there's likely to be an element of silver catching a bit on a rebound in global industrial activity. Palladium jumped 5.02% to $2,157.97 per ounce, having hit a peak since April 21st, and platinum rose about 4% to $876.89 per ounce, having climbed to a peak since March the 11th. So there we have it. The next 24 hours is imperative, as we shall see the direction silver moves in. We suspect a small fallback first, but frankly, as more stimulus is introduced, the higher precious metal prices will go, at least short term. Medium term, we're still convinced precious metal prices will continue to rise, and although today was a much faster rise than even we anticipated, we have stated repeatedly, in this environment, almost anything can happen. That said, we do think there is a limit ultimately on silver, and do not necessarily see it going anywhere near the highs that it reached in 2011. But that said, once traders begin to panic, then anything can occur. What is occurring, which we mentioned now for the last 2 weeks, is there is clearly the view that industrial production is beginning to pick up. And as economies not only continue to open, but open wider and further, and international trade resumes, then this undoubtedly will be further beneficial for silver prices. So $21 may not now be the limit for this year, but let's just wait and see. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.